The outside up candlestick pattern is a bullish reversal pattern that indicates a potential trend reversal. This pattern consists of three candlesticks, with the first candlestick being a small bearish candlestick, the second candlestick being a larger bullish candlestick that completely engulfs the first candlestick, and the third candlestick being another bullish candlestick that ends higher than the second candlestick. This pattern suggests that the bulls have taken control of the market after a period of selling pressure, and it is a signal to enter a long position. The three outside down is a bearish candlestick pattern that appears at the end of an uptrend. It consists of three candlesticks, where the first candlestick is a bullish candlestick, followed by two bearish candlesticks. The second and third candlesticks are larger in size and completely engulf the first bullish candlestick. The pattern suggests a shift in the market sentiment from bullish to bearish as the bears take control of the market. Traders can use this pattern as a signal to enter short positions or to take profits on their long positions. Two crows is a bearish reversal candlestick pattern that consists of three candlesticks. The first candlestick in the pattern is a long bullish candlestick that indicates a strong uptrend. The second candlestick is a small bearish candlestick that gaps up and closes near the middle of the previous candlestick. The third candlestick is a bearish candlestick that closes well into the body of the first candlestick. This pattern indicates a change in market sentiment, as the bears are gaining strength and pushing the price down. Traders use the two crows pattern as a signal to sell or go short on the security. The bullish abandoned baby pattern occurs at the bottom of a downtrend. The first candle is a long and bearish candle that represents the momentum of the downtrend. The second candle is a small and bearish candle or a doji that indicates indecision in the market. The second candle doesn't overlap with the first or third candle. The third candle is a long and bullish candle that confirms the trend reversal. On the other hand, the bearish abandoned baby pattern occurs at the top of an uptrend. The first candle is a long and bullish candle that represents the momentum of the uptrend. The second candle is a small and bullish candle or a doji that indicates indecision in the market. The second candle doesn't overlap with the first or third candle. The third candle is a long and bearish candle that confirms the trend reversal. The advance block is a bearish reversal pattern that signals a potential end to an uptrend. It consists of three consecutive bullish candlesticks, with each candlestick opening within the previous candlestick's body. However, the body of the second and third candlestick should be smaller than the previous candlestick, with increasingly longer upper shadows. The advance block pattern indicates that buyers are losing momentum, and the stock's upward trend is running out of steam. The long upper shadows show that sellers are stepping in to push the stock price down. The pattern is confirmed when the fourth candlestick opens lower than the third candlestick and continues to decline. As with any trading pattern, it's essential to wait for confirmation before making any trading decisions.